G'day everyone and welcome back to this ShareCafe Hidden Gems webinar. Today we're discussing DYI Diagnostics, rare earths, kaolin and halloysite, workplace products and services. If you have time, write some questions into the box provided. Apologies if there's some interruptions with the sound at the moment. First up, we have Stealth Global Holdings, a market cap of $13 million, ASX code SGI. Stock's got a one-year return of up 18%. We have with us Mike Arnold, the Group Managing Director. The company is one of Australia's largest industrial distribution groups, combining company-owned and independent retail assets. Mike, over to you. Thank you.
Morning, Tim. Thank you. If we can move to the next slide, please. So let's start with some investment highlights. As Tim said, in FY22, it's been a pretty big year. We built one of Australia's largest industrial distribution groups with combined assets, not only ourselves, but with independents, which I'll explain more. We work in a $40 billion market. We do have a track record of M&A growth as well as double-digit top-line growth. Importantly, we have a resilient operating model, which not only is balanced and diverse, but it's also a quality portfolio. We have an extensive range of products, that 95% of those are non-discretionary items, which drives ongoing demand. But also it allows us to push those products through multiple channels and from a stocking point of view, good turnover. We have an extensive opportunity from the events that are happening in 2022, and those events will occur over the short to medium term. We continue to give some guidance on our top line year-on-year growth of plus 10%, 8% EBITDA. Our results are due out on Tuesday. So obviously some of the information I'm providing today will get updated at that time. Move to the next slide, please. So if I just step back today, we have a revenue of $100 million. That is up 46% over the last 12 months. Principally, we're a distributor of industrial supplies. We also have value adds services as well as solutions that cover products to business, to trade, to retail, and also independents. So if you think of Metcash IGA, where you have a local operator owning a store, but they work in tandem with the corporate, that's the model that we operate. I founded the business in 2014. We listed in 2018, and we've been able to build quite a comprehensive group across Australia. Our key product segments also include safety, workplace, truck and automotive, and our industrial services element continues to expand from repairs and rental into etching and also back office services that we provide. Typically, the supply solutions is an integrated model for large customers that require a full end-to-end solution. If you move to the next slide, please. A really comprehensive board and management structure. So Chris Warden's been with me now for 5 years as chair, former head of Seven West Media Assets in Western Australia. John Gropoli is a former lawyer, but also former head of Automotive Holdings as their chairman and Retrovision in Western Australia. And Simon Poiterman is the former managing director of corporate for Bell Potter and also was the captain of the Wallabies rugby team. Next slide, please. Simply where we've evolved to today, we're a company for everyone in the workplace. So everyday industrial supplies and solutions. Our ambition is to be a market leader and the main partner for those different product groups. And that's all underpinned by a large interconnected distribution portfolio. Next slide, please. So the business connected strategy is really already cover the products and the solutions element. So, you know, the distinctive business areas are really about aligning the customer types. So the distribution model of business customers has a certain infrastructure that sits behind that. A retailing model and also the independence model, which works with our top tier 1 suppliers to provide a specialised wholesale service for them. Our channels are actually quite wide, and this allows us to have multiple touch points with customers, whether that be through a sales force that's out in the field or online, but also we have branch setups in stores. We have on-site stores at customer locations. We're online with 5 or 6 different channels, and also the service. So that's quite comprehensive. From a financial point of view, obviously, we do have a business that has high repeat revenues. We do have ongoing accelerated demand. Our scale now has provided us with the ability to improve margin, not only at a gross profit level, but also at a net profit level. We are a capital light model. Our business, as we continue to grow, will be generating stronger cash flow for our business from the leverage that we've gained. And also, I think with the way that the inflationary pressures around labour and also growth across a number of organisations, we're really well positioned for further industry consolidation. So we're active in the M&A space in the future. Next slide, please. From a resourcing point of view, you can see pretty comprehensive coverage on the right-hand side where we're located. We have 74 locations, 250 odd people. 40% of our staff is women, which I'm really proud of. We have 400,000 products in stock. Whilst that might seem a lot, and the 600,000 lines that we pull on demand, the operating model really is, once we have a product that has a certain amount of stock turns, we will then hold it because the demand supports that. Anything else we buy in on a as required basis to fulfill customer orders. We have 8,000 customers, 34,000 retail and trade consumers, and that doesn't include the operators that go into independent space. Next slide, please. So just to sort of put that in a bit of context, the subcategories of the products we sell are on the left-hand side of the screen. A whole mixed range of all types of products that you can see in a workplace. Equally, the brands that you see on the right-hand side are leading brands. They're just some of what we sell, but pretty comprehensive, which most people would recognise depending on what industries that you obviously associated with. Next slide, please. Our distribution platform or system is pretty simple. So we pull from our suppliers, we're into our distribution centres. We then feed our network with orders from a store perspective, whether that be on-site or independents or our own, and then they serve customers of all different types and sizes. So I guess in summary, for our capability today, we have a large-scale business. We've got high repeat revenues. We've got extensive distribution network where we've emerged across a whole host of different market positions, and our model is a key point of difference for our ongoing growth. So next slide, please. Next one. So let me talk about where we were in FY22. So $30 million growth, a bit over $100 million in revenue. We have a market cap of only $13 million. So with a 46% growth in our revenue and $55 million that was achieved in the second half, clearly there's a bit of a disconnect there. You can see across our markets, our product segments, and also the regions, we have a reasonably good blend. The regional side on the bottom right-hand corner is we were involved in a joint venture in the UK, and we've divested of that in the last 12 months, which has brought the majority of our operations and focus back into Australia. Our segments are very geared at the moment for business customers, and that's clearly demonstrated by our foundations and the industrial element, which is 60% of the products that we sell. It's an endless assortment bucket of products. So that is typically what we would expect in a business of ours. Next slide, please. A transformational period in FY22, been extremely busy. growth trajectory from a financial point of view, but also in terms of strategic events. So looking at below the arrow, we've had 3 acquisitions we've undertaken and a divestment. So we acquired Skipper Transport Parts, which added annually $18 million worth of revenue, which we'll get the full benefit of this year. We acquired the buying group of United Tools, which, if you think Metcash, we acquired the Metcash equivalent, and we've also acquired one of the stores. So we bought the local independent stores in Albany, WA. We won several new contracts, which was the first for the company, 18 million in annual revenue that will contribute in the next 2 years. When we acquired Skippers, we consolidated that into the same warehouse as one of our other operating brands, Heatley Safety Industrial. So we have warehouse configuration. We took a number of store upgrades, a number of e-commerce programs, as well as new premises. So that's about improving our branding, making sure we have a great customer experience and efficiency. Top of the line, we added 41 stores, which is significant, 22 new product categories. We increased our inventory, which didn't slow us down to supply the customer. Importantly, also, we had 70 odd people that have joined our business, which I've already mentioned women, but we also undertook a migration of the Skippers business onto a new ERP. So significant progress on our strategy, and an extremely busy year for our organisation. Next slide, please. Since we listed, this is just to put some perspective in terms of what we've achieved. So moved from 24 million to 100 million. Also in that time, we walked away from $20 million contract in Africa, which was low margin and high cost. So today, if we had held that, we would have been north of 120. We've gone from one location to 74, from 2,000 odd products in stock to 400,000, from 200 customers to a significant amount of consumers and customer base, similarly with employees and similarly with the number of suppliers. And all that gets anchored underneath the strategic framework that we've stuck with from the beginning, is following the 7 principles from having a balance of organic and M&A growth, good balance across geographic areas as well as business segments. We run decentralised organisations that are fully integrated. Synergies is very big in terms of what we do, as well as distribution excellence. And all that is wrapped up in ensuring that we have a long-term sustainable business that benefits our shareholders. Next slide, please. I put this up. Interestingly, it shows you the last 3 years from the 1st of July to 30th of June, where our share price moved in that time. On the top right-hand side, why do we say we're undervalued? Our current price is 13 cents. We've got 2 different measures, one from a paid research, Corporate Connect, which has put a fair value research report out on the 11th of July for 33 cents, and ANZ Share Investing have us down for 28. So clearly we're undervalued by somewhere between 55-60%. And clearly an organisation that's turning over $100 million today, and what I've just explained to you is significant in terms of its opportunity in the future. Next slide, please. So what are the key takeaways? We have built one of Australia's largest industrial distribution groups. A lot of that today is very embryonic, so the full benefits of that will materialise this year and next year. We work in highly attractive markets, which is large, $40 billion we've identified. The largest player in that market is a bit over 4%, which is a Wesfarmers business. We have an extensive pipeline that really sits well with strong business fundamentals. We expect midterm growth of the significant size across all our businesses, and in that we are growing market leadership. So we have a really good, true, solid business that has got plenty of upside in the future. Great, thank you, Tim. I'll hand that back to you.
Thanks, Mike. A couple of questions here. What's your current take on the underlying business conditions for some of your key customer industries?
We see them varying across a number of different areas, but really robust. I guess resources, infrastructure, construction, transportation is a big area of what we do as well. The building industry obviously has huge demand. So what we're finding is that everyday products is continuing to have regularity, but also there's a number of projects that are upcoming that we are going to participate in. And the beauty about our network and what we've been able to create recently is our products cross-selling across the whole network. And that means that we're providing more value to more customers that would traditionally come in for one or two items, now have a broader mix of what's on offer. So almost a one-stop shop type of offering.
And those acquisitions you spoke about, Skipper, United Tools, can you give us an update on the kind of integration of those businesses?
So Skipper's we acquired in late August of last year. That's been fully integrated. We are in the process of cohabitating or merging multiple brands into store locations. And the reason why we're doing that is our customers are demanding us to be in those locations and their sales upside. The United Tools buying group acquisition occurred in March, and that's we started working with the top 40 suppliers across our group to bring that together to not only add leverage and improve commercial terms, but also to ensure that we have one support system that can feed the multiple operating businesses. And the Albany acquisition, we are looking to merge that with Skipper Transport Parts to cohabit one location over the course of the next coming months. All those businesses, except for Skipper's has been flatlined. All those businesses have grown significantly above expectations. So, it's really advanced our business. There's been a lot of learnings, and our next phase of our acquisitions and integration will continue over the next 12 months.
And of course, Mike, inflation is affecting everyone. Can you talk us through how you manage that kind of cost inflation? Do you pass it on to your customers or look for internal efficiencies, for example?
Well, firstly, efficiencies for us is where we need to, we have invested, but also we continue investing. So what that will do is create a lower cost to serve, and that offset some of the inflationary pressures. From a labour perspective, clearly, labour costs are increasing, and the efficiencies, what we're finding, are offsetting the labour costs, and the price of goods or the cost of goods and the supply and cost of freight. We don't plan to push all of that across to our customers. We are pushing a reasonable amount, which is part and parcel of obviously doing business. We want to be with our customers for a long, long time. So we're working with them about how we can be fully integrated, how we can actually have a lower cost to serve model, how we can have a streamlined supply chain. So what that will do is bring down our operating costs, but also offsetting inflationary costs that come on. So we've grown from 18.5% gross margin in 2018 to 30.4% in 2022. That's up from 29.1, in FY21, and up from 26.6 the year before. So we've continued to increase our gross margin, and I don't see that changing in the immediate future.
Great, Mike. That's all we have time for. Nice to see you again. Congratulations on your recent success. We'll follow the story with interest.
Great. Thanks, Tim.
Okay, next up we have Atomo Diagnostics, ASX code AT1, market cap around $42 million. We have with us the CFO, Will Souter. The company is a global leader in the user-centered design of innovative, accurate and reliable digital diagnostics. Will, thanks for your time. Over to you.
Thanks, Tim, and thanks for having us on the program. I'm pleased to present today on behalf of Atomo. Our CEO and founder, John Kelly's in the US, attending a number of conferences and customer engagements. So I'm stepping in, and also because we've just released our FY22 results, so I'm in a position to provide an update on the financial results for the year. as well as discuss a little bit about where we're heading for FY23. If we could move on, I just wanted to talk about some of the key value drivers behind the business. I think if we go back to the foundation of Atomo and think about, where the people in the business came from when they set it up, the focus was very much on bringing a user focus to a very traditional industry that had been dominated by labs and dominated by a very traditional and incumbent kind of approach to diagnostics, and thinking about how testing could be done at home, in remote settings and with untrained users, and still be effective, still be efficient, and make that user experience significantly better. So that's how the company started, and that's been the kind of innovative approach that they've taken to diagnostics during that early R&D phase. We've since moved into full commercialization of that with a number of patent protected products, and through that took the company to IPO in 2020. We're in a very strong financial position. We've obviously had a big couple of years since listing, with COVID, the pandemic impacting both positively and negatively for the business. And I guess at the same time, we've had the technology's been validated by OEM customers coming on board, and also regulators approving the products. We've substantially installed our capacity for production, so we're now able to do up to 18 million units of production a year. So our capital spend is largely complete. Funds from IPO were deployed to do that. I think the other significant change as a result of the pandemic is that the market has accepted rapid testing as something that can be done in a home environment and in a decentralized setting. And I think everyone on this call has probably done a rapid test by now. I'll be very surprised if they haven't, whereas 2 or 3 years ago, it was less common and less well understood by end users. If we could just go on to talk about the company itself, we're headquartered in Sydney. I've got a production facility in South Africa. As I say, a global business. We've established a business development presence in the US and in the UK. And really over the last couple of years, we've been focused on responding to the pandemic, building out our production capacity, but also, I guess, continuing with our core business in R&D and design around rapid diagnostic tests. We could move on to the next slide, please. So in terms of key achievements for the year, we've completed that industrialisation of our production facilities. Here in Australia, we have a patent-protected blister machine that produces the blisters that are a core component of one of our rapid blood testing platforms. So that's been fully validated and ready for full production. And we've also expanded our production capacity of our cassette devices. So we can either sell them into the OEM market, where other diagnostic companies put their tests on those platforms and take them to market, or we can produce our own finished products with those devices, such as our HIV test that we produce at our facility in South Africa. So we're now ready to go and expand rapidly as demand requires it. We obviously were impacted by COVID, and in Australia in particular, that came a little later than it did in the rest of the world. And we responded to that by obtaining TGA approvals for both the COVID-19 rapid antibody test and a COVID-19 rapid antigen test for professional use. And we have been selling those in substantial numbers. More than 1 million of those were sold over the period, the FY22 period. And that's been extremely helpful for us. Obviously, we're keen to respond to the pandemic and provide that service, but also it's been extremely helpful for us as a company, because we've made significant sales, more than $10 million in sales during the year. And that's enabled us to continue to push forward and build a cash buffer and a runway into 23 and 24, while some of our other business development was delayed as our customers and potential customers were also impacted by the COVID-19 pandemic and directed their attention to responding to that. As I say, we've established ourselves in the US. We've actually put a corporate structure in place there and established bank accounts and so on, and hired that senior business development resource and built some really strong relationships on the ground there for manufacturing and production, and are in the process of expanding out our business development partnership engagement there with potential customers. I guess what we've also been doing is moving beyond blood-based testing. So the initial platforms that Atomo's developed are for rapid blood testing. Obviously, during the pandemic, it was predominantly swab testing for rapid antigens. So we've been working on that in the background. The team's been coming up with all sorts of innovative solutions to swab-based testing, and we have a device in pilot production stage for that particular device, which is very exciting. And we debuted that recently at a conference in the US, and it received a very positive response from the market. Importantly, as I say, a very strong balance sheet position at the end of the year that gives us the funds we need to go into 23. And we're really redirecting those efforts to emphasise business development activities and marketing now that that production and manufacturing installation is complete. Just coming now to the profit and loss for the year. You can see on the right-hand side there, as I say, Atomo spent the first 8 or 9 years of its life going through that R&D process, and really only started to commercialise in FY19, where we did around $500,000 in sales. In FY20, we did more than $5 million. In FY21, we did nearly 7. And then I'm pleased to report that we've more than doubled that this year to $14 million in total revenue from customers, for an all-in gross margin of around 42%, and improved our underlying EBITDA position by 23% as a result. Our gross margin is obviously impacted by the product mix. More COVID testing at slightly lower margins has brought the margin down somewhat. And also our HIV sales have increased in global health where margins are a little bit lower. But obviously at the top line level and at the gross profit level, we've contributed additional funds to the company to enable us to move into the new year in good shape. I guess when combined with our income from the R&D rebate, that's taken our total revenue over $15 million, more than 1 million COVID tests sold over the course of the year, and more than 500,000 HIV tests sold throughout the year. Just moving on to the impact that's had on our balance sheet. As I say, we finished the year with around $13 million in cash and debt-free, puts us in a very strong position relative to some of our peers and others in the market at this relatively early stage, only 2 years post-listing. So we're very pleased about that. Balance sheet's in good shape. We have some inventory there, which is related to COVID stock that was purchased in the last quarter. So we'll obviously be selling that as we move through FY23. And we've also entered into a new supply arrangement for COVID-19 rapid tests with a company called All Test that we announced earlier in the week. So we'll be selling their self-test in the market here in Australia, and also taking that product to the TGA for approval as an Atomo branded test. Just move on to the cash flow. Just a quick bridge on the cash flow. We started the year with $18 million, more than $16 million in cash receipts from customers, which is extremely pleasing. Another $1.8 million came in from the R&D rebate. And we've used that funding to run the business, to purchase stock, and as I say, to close out that capital investment across the production side, and also to continue to invest on the R&D side. R&D investment for the year across both profit and loss and across the balance sheet was more than $2 million. So as I say, we're continuing with with the core activity of the company, which is coming up with innovative rapid test device solutions. If we just take a step back to our strategic focus, we've shared this with the market a number of times, and I guess just to re-emphasize that that's really what this business is all about. It's about the core capabilities around device design. It's about thinking about things differently and thinking about them from the customer's perspective. And there's a bunch of components and patents and IP that go behind all of that thinking to produce something that ultimately is simple for the customer to use and delivers a top quality diagnostic result with a minimal amount of errors. And that's really what the company's all about. So we then approach the market in 3 different ways with those devices and the components, which is obviously a focus on infectious disease testing, particularly HIV and obviously COVID in the last couple of years. Selling our devices themselves to other diagnostic companies. So NG Biotech, for example, who have a rapid pregnancy test, is one of our customers. So we sell the device to them, they put their pregnancy test on it and take it to the market. And then increasingly focused on consumer health and wellness markets where there's a huge growth in opportunities for us. If we could just move on to the next slide. Just to expand on that, there's been a significant change in acceptance of rapid testing, as we discussed at the beginning of this presentation. We've seen that landscape shift significantly because it had to. The pandemic drove that. Regulators have now accepted that people can do this type of testing at home. And as a result of that, there's been a lot of investment going to the sector, a lot of awareness, right across the market about rapid testing, about at-home testing. And that is very helpful for Atomo. It obviously puts us in a great position where our consumer-focused and user-focused approaches to rapid tests are really, really important. and our customers have the opportunity to get regulatory approvals for at-home tests that they wouldn't otherwise have got if they didn't have the usability of the Atomo device. If we could move on, please. So just to reiterate that point, the estimates on the rapid diagnostic, the size of the rapid diagnostics market, up to $50 billion by 2025, and a lot of transaction activity, a lot of investment activity in the sector, and general market sentiment is a significant tailwind for Atomo. If we move on to the next two slides, we're really talking about our customer base here and our go-to-market strategy. So we're really engaging with our OEM customers to show them the utility of our devices and how they can help them differentiate themselves from their competitors. And if we move on to the next slide, we're also expanding our finished product set beyond HIV and COVID into other areas and looking at launching our own pregnancy test, particularly into the North American market on our platform. That's a priority for us. And following on from that, other tests, vitamin D, thyroid, and semi-quantitative tests that involve our Atomo app for reading the outcome and also integrating with other reader systems. We can move on to the final slide just to reiterate the strategy and where we're going for FY23. We're really switching that focus away from producing, from manufacturing and production capacity to business development and market-facing activities. We're scaling up engagement with our OEM customer base. We're moving towards production of more finished products. And I guess with that, we're focused on building out our product offering more broadly, and very pleased to finish FY22 in a position to be able to execute on that strategy with a strong balance sheet and good runway going into the new year. Tim, happy to take some questions.
Thanks, Will. You've been at the coalface this year, that's certain. Now, the COVID test revenue has obviously contributed greatly to your recent revenue. If that slows, which product do you think picks up the slack?
Yeah, interestingly for us, COVID's been a defensive mechanism in some ways, because when our customers are distracted by the pandemic because there's been another wave or another variant come through, we've been able to sell more tests ourselves in the COVID market. As that slowed down, we've seen those customers come back to us and say, okay, we need to do other things beyond COVID. You have a unique differentiated product. We can work together with you to bring other products to market. And particularly now that those customers have installed significant production capacity of their own, they're looking for other ways to use that. So in some ways, there's a natural hedge between our COVID sales and sales of our other products and our device sales under the OEM banner.
There's a question here in terms of a new HIV test. It's priced at $1. How will Atomo kind of plan to meet this challenge?
Yeah, look, global health's an extremely competitive market. And obviously, we're very pleased that that access to HIV testing is expanded by these low price points and by lots of production being available. Our price point is very close to that. And in global health, what you need to do is you need to get World Health pre-qualification. You then need to go to each individual country and register your product. And we're well through that journey. So that gives you an established position in countries internationally that can't be replicated overnight. So that's the first thing. And the second thing is obviously that emphasises the need to have other products in other markets as well, so that our overall blended product mix still maintains strong gross margins. And that's the business's strategy.
And just one last question, Will. What does a typical licensing deal look for in regards to Atomo's technology?
Yeah, it's an interesting one. We've explored, different structures from that perspective. We're not going to be manufacturing billions of devices, so at certain volumes it makes sense for people to license our technology from us. We're not at that point yet. We're manufacturing our own devices and selling them to other people, but certainly at a point in time with volume, we would expect licensing deals to be a solution to that volume challenge, and we look forward to that because that obviously sets us up for sort of long-term annuity income through that kind of stream, at zero capital. So that's an ambition for us over time. We're not there yet, but we certainly expect to be at some point in the future.
Great. Well, there's some more questions I'll send through to you. Thanks for your time. Have a nice weekend.
Thanks for having us, Tim.
Next up, we have Iconic Rare Earths, ASX code IXR, market cap of close to $200 million, 1 year return of up almost 55%. We have with us the Managing Director, Tim Harrison. The company is focused on developing its flagship Makuutu Rare Earths project towards production. Over to you, Tim. Thanks for your time.
Thanks, Tim. Welcome, everyone. Thanks for the opportunity to talk through what we're doing at Ionic Rare Earths. we're taking our unique asset at Makuutu to develop a downstream supply chain of both magnet and heavy rare earths. Next slide, thank you. Just our cautionary statement, and moving on to the next slide. So the opportunity that we're focusing in on is the ability to provide new supply of both magnet and heavy rare earths into these new Western markets that are emerging at the moment. The rare earth supply chain is completely dominated by China. When we look at the main application, the highest value application of rare earths in the current climate, it's permanent magnets. So neodymium iron boron permanent magnets, which are used in a number of applications, but are going to be used increasingly in the net zero carbon technologies, principally EVs and offshore wind. So as we look to these markets that are going to emerge over the next 30 years, we see a massive opportunity for Ionic rare earths with our basket of magnet rare earths. Importantly, we have the full spectrum of magnet rare earths, much more than just neodymium and praseodymium. It's the dysprosium and terbium where we see tremendous opportunity for Ionic, given that at present, about 98% of the world's current supply of dysprosium and terbium emanates from China. We can see substantial statistics around forecast adoption of specifically EVs, and noting overnight that California has implemented a ban on gasoline-powered cars by 2035. We see a tremendous groundswell of opportunity that's emerging in the magnet rare earth space. Moving on to the next slide, thanks. So in order to satisfy that emerging opportunity, we've got the asset at Makuutu, a large ionic adsorption clay deposit, a very unique deposit in the context of other rare earth investment opportunities that many Australian investors have had access to. These assets are very rare. They're common in southern China and Myanmar. As I mentioned earlier, they're the source of a substantial amount of the world's current supply of both magnet and heavy rare earths. When we talk about heavy rare earths, one of the major constituents there is yttrium. Yttrium is critical for the F-35 fighter jet. All yttrium comes from China, and so hence we've had tremendous interest from key Western governments like the US that's looking to get a secure and stable supply chain of heavy rare earths independent of current supply out of China. So we've got a tremendous asset with Makuutu. It's a near-surface mineralisation which enables us to employ very simple mining and processing techniques, and importantly produces a product with no radionuclides. From that product, a mixed rare earth carbonate produced at Makuutu in Uganda, we're looking at going downstream, developing our own refinery, refining the mixed rare earth carbonate to oxides, and then potential to work with emerging supply chain partners to take that oxide material and convert it to metals, alloys, magnets. So we do see this as an opportunity that is going to increase in demand substantially over the rest of this decade. We've also added magnet recycling capability, and so we're looking at that vertical integration and circular economy of rare earths and taking a leading position in those markets that are going to emerge. The basket from Makuutu and the offering from Ionic, it's rich in both magnet and heavy rare earths. And so we have received tremendous potential engagement from end users who are looking at secure and new and emerging supply chains without any sourcing from China. And if we look at the sheer demand on magnet rare earths, just to meet the previously committed targets on EVs and wind turbines, there's projected to be an 8-fold demand increase in magnet rare earth supply by the end of the decade. So we do see a tremendous opportunity moving forward. So next slide, thanks. Just a quick corporate snapshot. We have about 3.8 billion shares on issue, trading at around about 5 cents at the moment. So market cap's around about $200 million. Cash at the end of the last quarter was around about $26 $0.8 million. So we're well funded. We did a capital raise earlier this year, and we raised 30 million from mainly global institutions and thematic funds. And we are looking to create substantial value over the next 12 months as we take forward both the Makuutu project, magnet recycling, and also putting some more definition around downstream supply chain. Moving along to the next slide. So if we take a closer look at Makuutu and just talking about that asset, it's a massive resource. We recently announced a 500% increase in the indicated resource base, and we are focusing on the completion of a feasibility study focused on the Makuutu Central license, which will be required for a mining license application, which we're looking to submit by the end of October this year. We currently own 51% of the Makuutu project. We have preemptive right on the remaining, we moved to 60% on the completion of a feasibility study, and we have a preemptive right on the remaining 40%. A very strategic asset, very hard to find these assets outside of southern China and Myanmar. It's one of two that are development ready globally. And we do see a great opportunity given that the other ionic adsorption clay being developed in Brazil has its product committed to China for some period of time. So when we're looking at these new supply chains and where they're going to source material from, we're in a unique position in that we're very close to being in the position where we can start operations hopefully around second half of 2024 and getting this asset into production. All the infrastructure is available at Makuutu, and beyond the large resource, we've got substantial exploration potential. We announced an Expiration Target earlier this year, which has the potential to double the resource again. So just moving on to the next slide. We've recently completed our public hearings on our environmental and social impact assessment. Very strong engagement in Uganda. We've had very strong support from stakeholders at government level, government departments and the local community. We recently held 2 public hearings with over 3,800 interested stakeholders attending those 2 events. So we have had a tremendous support as we move Makuutu through this mining license application process. Moving on, thanks. So if we look at the resource, it's a long mineralisation trend, stretches approximately 37 kilometres long end to end. The resource that we've defined covers approximately 26 kilometres of that. And if we look at the mining licence application, it's around that Makuutu Central area. So that's the area of the retention licence, which is coming up for renewal or expiry at the end of October, and hence a requirement to move swiftly to a mining licence application. Moving forward, on the exploration licence or the expiration target, the areas we've identified with potential to grow. Obviously, we have a large radiometric anomaly out to the east. We've done some initial reconnaissance drilling out there. We drilled 23 holes, roughly spaced about a kilometre apart. Of those 23 holes, of the 25 holes drilled, 23 came back with rare earth bearing clays above the cut-off grade. So we do look quite favourably at the potential out to the east, and beyond that, we've got a new province up to the northwest, and we've just done some field work. We'll be looking at getting the drill rig spinning later this year, hopefully once our environmental impact statements have been approved for explorations on those tenements. Moving to the next slide, thanks. As far as our focus on going downstream, with a unique basket like ours, we've had strong interest, obviously, from a number of groups across Western markets, principally across the US, Europe, UK, India, and Asia. So it's a unique basket offering. With that unique product, we've identified a significant value addition that can be achieved by developing our own refinery. We continue to focus on that refinery. We've been evaluating locations, and we'll be in a position to update the market later in the year around the timing of the feasibility study and the mining license application out of Makuutu. moving forward. So when we look at the supply chains that need to be built, the interest that we're receiving is around being a participant in the supply chain of these new magnet rare earths supply chains that need to be built across the US and Europe. Europe has identified targets to build magnet capacity by 2025, US 2026. So we're rapidly approaching the point where those domestic supply chains need to be built, again, creating a great opportunity for Ionic. Moving to the next slide, thanks. The final string to our bow is the magnet recycling piece. Earlier this year, we acquired a company in the UK called Souter Technologies. We are now moving ahead with a magnet demonstration plant, which we're aiming to have operational next year. And, we see a tremendous opportunity for magnet recycling to be a growing component solution to the world's requirement to identify, produce greater supply of magnet rare earths going forward. Presently, it makes up about 25% of refined rare earth production or magnet rare earth refined production globally. And so we think that this is an area that's going to increase, and increasingly there's going to be more demand to have jurisdictional recycling across Europe and North America. Moving to the next slide, thanks. So when we look at the value proposition, obviously we've got a very strategic asset with Makuutu, long life asset potential, and a target to get this mining license application submitted later this year for an award early next year to get Makuutu into production, ideally in the second half of 2024. Path to being vertically integrated by going downstream and unlocking the value of the basket, and incorporating magnet recycling. And these are key steps that enable us to be an early mover in being a participant in these magnet rare earth supply chains that are going to have to be built over the course of the next few years to be able to help North American and European stakeholders deliver on targets to be independently producing magnets by the allotted or the target dates. So that's our story. That's our focus. We've got a lot of catalysts over the course of the next 6 months, and a lot of work happening to unlock value out of the product at Makuutu and long-term supply chains that need to be built. Thanks, Tim.
Thanks, Tim. A few questions here, quite a few questions here. One, when you talk rare earths, there can be radioactive elements associated. Is that an issue moving forward?
Yeah, look, it's an issue that plagues the hard rock projects. But the key differentiator for us is that being an ionic adsorption clay, we're not concentrating minerals. It's a chemical process whereby we're extracting the rare earth in an elemental form from the clay, and we precipitate it as mixed rare earth carbonate. So we bypass many of those issues that the hard rock players have to deal with. And it also affords us an opportunity to go downstream in some of these locations that, again, they'd have significant challenges in doing so.
And can you talk through you touched on it, but can you talk through the kind of pathway to production?
Yeah, so the focus for us is to get the mining license at Makuutu. I think that becomes a significant step that de-risks the project, de-risks the company, and potentially leads to a re-rate. Once we've got the mining license, we're able to, I suppose, be able to action or be able to move with a bit more colour around the downstream strategy. I think there's a number of interested parties who are interested in getting access to our product, but critical to this is really the mining license application being able to move forward with operations on the Makuutu Central area.
And when will you be in a position to talk with offtake partners, for example?
So, I mean, one of the issues with the rare earth supply chain and offtake is that these supply chains have to be built. It's going to take some time. We've been having discussions over the course of the last 18 months with potential participants in this space. There's a lot of work that's going on in order to try and build these supply chains. We are working and evaluating a number of strategic partner opportunities. It's a tough question to ask at this stage because there's a lot of moving parts, and we're hopeful of being in a position to be able to do something more meaningful once we can move forward with Makuutu.
And Tim, some of these automakers aren't kind of using rare earths in new kind of battery developments. Do you see that as a threat to your market size moving forward?
Yeah, look, I mean, we've seen this being talked about for quite some time. The reality is that the go-to magnet or the go-to motor in the EV space is the permanent magnet synchronous motors. It's the most efficient electric motor in application today. Those motors are dependent on supplies of not just NdPr, but critical to them is the dysprosium and terbium, which comes from today the ionic adsorption clays of southern China and Myanmar. And whilst China is looking at doubling the capacity out of their production, they're a net importer of rare earths at this point. There really isn't going to be much DyTb available for Western auto manufacturers as we approach the end of this decade, which again creates a great opportunity for Ionic to be a key enabler of both EVs and offshore wind over the next few years.
Great, Tim. That's all we have time for. There's another question there, if you don't mind asking it or answering it, rather. Have a nice weekend. We'll get you back on in the near future.
Thanks, Tim.
Next up, we have Pinnacle Minerals, ASX code PIM, market cap around $5 million. Newly listed last 12 months, I believe. We have with us Stephen Ross, who's one of the company directors. The company is a technology metals company focused on the exploration and development of its portfolio of kaolin and halloysite prospects, both in Western Australia and South Australia. Stephen, thanks for your time. Over to you.
Thank you, Tim. Yes, I'm one of the founding directors of Pinnacle Minerals. We only listed in March this year, actually, late March this year. So had a successful IPO and we've been pushing on ever since then. Bill Witham and Rob Hodby unfortunately couldn't join us today, but we've got a very flat structure in that we're all running the company. So a couple of photos there to open the presentation. They're from our Kojonup Bobalong project. So you can see that we're working in very flat land and the kaolin is very visible on surface. Next slide, please. Just move through the disclaimer. Next on. So I'll give you a summary of who we are. Like I said, we only just listed in March this year. The company went from inception in November last year through to listing in 4.5 months, and that's through the great support of our vendors, which was Bill Witham and Rob Hodby, and a vendor out of New South Wales bringing in our South Australian projects. Commodity is kaolin. Kaolin is one of the most ubiquitous clays on earth, but you need certain qualities to actually be marketable. And we're targeting really a wide range of industries: paper and paperboard, ceramics, and cosmetics, pharmaceuticals. Then, of course, going into the technology sectors, it's especially the halloysite products are being used in that technology sector, and companies such as Andromeda are really pioneering that. And we're very fortunate to have a project right next to their Camel Lake project. Our strategy really is a very simple business into develop a near-term cash flow. I mean, we are moving down product development now and really investigating the logistics about getting our products to various ports as quick as we can. We have qualified our products out of China and have identified our markets, which is a big step forward. And we're located in West Australia and South Australia. So we're a purely Australian company, kaolin products, and we couldn't be in better jurisdiction. And the team, Bill Witham in particular, our chairman, has really been involved in almost just about every kaolin project here in WA in some form, whether it's consulting or being involved in vending it. And these projects around Kojonup in particular come out of his portfolio. We floated with $4.5 million, and we've spent less than $1 million over the past 6 months pushing our projects forward. Next slide, please. So just a really summary on the corporate side of things. We've only got 36 million shares on issue. There really was no cheap stock. We basically did a very small seed raise at 16 cents and listed at 20 cents. Market cap, we have trading around about 13 cents at the moment. So we're trading at almost cash, only got an enterprise value of $1 million. So that's why I really enjoy the name of this webinar series being called Hidden Gems, because you'll see later on our peer comparison. I really do like to think we are one of the hidden gems, especially in the kaolin halloysite space, on what is out there in the market on the ASX. Our top 20 shareholders really hold over 60% of the company. And then, our 3 vendors are there holding almost 20% of the company. Next slide, please. So that's our board, which I just went through. So Bill and Rob and myself, founding directors. Link Lou comes out of New South Wales. He brings a lot of corporate experience to our board. And then we've got Jay Stevenson, one of the best well-known company secretaries around Perth in particular. So, and we're a very flat structure in that we're all working on the company. And Bill and Rob are certainly putting in the hours, as are myself, in regards to running the company and not really having many external people involved. Next slide, please. So we've got 4 projects, all in Australia. Our lead projects are around the Kojonup region of Western Australia, which is only 130 k's north of Albany. So of a lot of our peers, we're much closer to any ports, and a lot of the kaolin companies are out in the wheat belt. And all our tenements are granted in the Kojonup region. They're the 2 projects called Bobalong and Holly. Bobalong being the most advanced. We've had samples go up for product qualification up in China. We just recently completed an auger drilling program to do some more resource work. We're waiting for final results on that. So that's part of our news flow coming up in the next month or 2, and working on expanding our current resource. Then our exploration projects are in South Australia. The White Knight project, which is down on the Eyre Peninsula, all those licenses are granted. They surround our Power Minerals and Andromeda. And then we got the application up in Camel Lake, which surrounds the Andromeda project, which really underpins their $300 million market valuation. Next slide, please. So kaolin, like I said, look, I won't spend much time. It's one of the most researched and ubiquitous clays in the world. It's used in everything from ceramics, fiberglass, paper coating, pharmaceuticals, rubber, plastics, but it is the primary source of HPA. And there's a lot of HPA work going on here in Australia, in particular for lithium-ion batteries. And we certainly believe our South Australian projects, as a minimum, will certainly contribute to that halloysite market. That's part of our upside. But in regards to our initial cash flow projects at Kojonup, that's purely a kaolin DSO type ore. And it's got such a number of wide uses that we're really confident on how the product qualification's been going. Next slide, please. So the Bobalong project, like I said, it's highly saleable. We've already had half a tonne sent up to Wuhan, which is the leading kaolin classifiers or qualifiers in China. We've got a report really being translated and finalised at the moment in regards to the products that were available, the markets that were available to sell into. It's a DSO ore, so it's a very simple beneficiation on site, and then really it becomes a marketing exercise on how much we can move from our Kojonup operations down to the port at Albany and then export out. So we are in that pre-scoping study stage at the moment. We really don't require many drill holes to define our resource, and it's just a very simple project to get into production with a really unlimited scope on how much product we can sell. Next slide, please. The kaolin market's a huge market. It is, like I said, I keep stressing it's one of the most widely used clays in the world. You've got products that really are anywhere from sort of $300 to up to over almost $10,000 Australian a tonne, depending on where you sit in the production price line. There's a number of different peers in the market, including Andromeda, Latin Resources, it's Power Minerals now, and Suvo Strategic in particular announced a very interesting announcement today in regards to their production profile moving forward. And so it's these types of peers, including W Kaolin, that we will really be matching our project on and comparing ourselves to. You can see there on the right the samples that come out. So it's a very white clay, and that's what you're chasing there. And then you've got the halloysite, which is the high value product that we believe will be coming out of our South Australian projects. Next, please. So just go back to Bobalong. We're only 130 k's from Albany Port, which is really important. That gives us a big advantage in regards to our logistics compared to a number of our peers in the region, which really are anywhere from 300 kilometres plus out in the wheat belt. All our tenements are granted. We are now in offtake discussions with our various product potential buyers, and that's all on the back of the work that was being done out of China, out of the Wuhan Institute, and we have met all those specific specifications to allow us to go market our product. Next, please. The Holly project, sorry, just to keep going, Bobalong, which is actually next to Holly. We've had those brightness and brightness tests done, which is very important. You want to be targeting plus 80% for your whiteness and brightness, which we've done. We've got a lovely mix of aluminium oxide and silicon dioxide. So there's a potential second product stream there with our silica, but we're certainly valuing ourselves only on our kaolin or clay products at the moment. All our test work is showing that we've got the right particle sizes, the right low number of impurities, and most importantly is that fourth point in regards to doing a DSO type operation. Now, what our Chinese suppliers or any suppliers or buyers in the world want from us as suppliers is they want consistency in regards to the quality of the product, and they want long-term contracts, long-term offtakes. They're not interested in 5 or 10 years. They're looking at 15 years plus, already talking 20 years plus. So they want an ongoing supply, being consistent at all times. And that's exactly what we can supply, we believe, because we're targeting a 10 million tonne resource as a minimum out there in the Kojonup region at our Bobolong project. So if we move on to the next slide, which is our Holly project, that's just north of our Bobolong project. This is what created the company, putting these two projects together. Thus, we believe, looking at the old CRA results, because CRA was very active in this region in the 90s, look, they targeted a massive plus 100 million tonne resource out there, and we've identified kaolin over 40 square kilometres. So that's an immediate addition to our Bobolong project in terms of exploration upside, and that's our part of our drilling program moving in the next 6 months. Moving on to our South Australian projects on the next slide. These projects surround some pretty well-known projects actually out there in the markets, particularly in Andromeda, and they're sort of really pioneering work on the halloysite market and the high-value halloysite. And we have got the Camel Lake project, which just surrounds their Camel Lake project. And then we're down on the Eyre Peninsula, where you've got a number of companies, including iTech, doing some really good work, as is Power Minerals and Ore Resources. So we are granted down on our White Knight projects now. We're going to be ready to start exploring there in the fourth quarter of this year. And what's been really interesting is following iTech and their REE results that they've been announcing over the past few weeks. And we've certainly been looking at their REE potential down there. But on the Camel Lake project, you've got the halloysite horizons running into our project area, which will be part of our exploration program the second half of this year. Next slide, please. So that's Camel Lake, like I was saying, that's the underpins the Andromeda $300 million market cap, and we keep a very close eye on the work that they do. They really are pioneering that space, and we come with a historical exploration database by Rio Tinto and Iluka. Next, please. So this is a really important slide just to compare who our peers are out in the marketplace. Our NDAV is actually done as part of our IPO. Enterprise value actually is only $1 million at the moment, so we're almost at cash backing. But you can see most of our peers are really running at 10 to 20 times our current valuation. So this is why I love the name and being part of this Hidden Gems webinar series, is that we really believe we are part of a hidden gem that's hidden out there in the market and not being valued in relation to our peers. But that's fine because we're only a new company listing, and we are really, our next 6 months is where all our information, our market flow and ASX releases will be pouring out into the market. So really glad that people are watching this and seeing who we are and who we're compared to. Next slide, please. And so this is the final slide, our indicative news flow. Really, it's the next 6 months where all the news is going to be coming out. We've got our resource out at Bobolong, aromatic surveys. We've got drilling starting at Holly and White Knight. And then look, really by the end of the year, we're hoping going to be talking about offtakes, what prices we can expect, and then be drilling down at White Knight in South Australia.
Thank you, Stephen.
Okay, great. Thanks, Tim.
I'm going to take the glasses off the top of my head.
Right.
Really interesting presentation. Thank you. Now with your kaolin samples, they've been qualified in China. Does that mean China is really the focus for you in regards to offtake agreements in the future?
Look, I will say it's a focus, Tim, but it's not our only target market by far. There is a worldwide kaolin market, particularly out of Europe and the paper manufacturers. Also, the Korean market is incredibly strong. But we've targeted the Wuhan market because, or say the Chinese market, because our directors, Bill Witham and Rob Hodby, have got history up in there. They actually sent that sample up in 2020 when it was a private company. And then as we know, the world changed, especially in Wuhan. And so that's why it's been up there. And Wuhan University, what they do is they qualify the product and then go out to the various buyers out there in the Chinese market. So yes, it is our primary target, but no, it's not our only target.
And when you presented that kind of pricing scale, Where do you fit on that scale?
Well, it's a good question as well, and that's what part of our product qualification is. And interestingly, Suvo announced today that they're going to be getting it plus $500 a tonne for their material. We believe we're in that market for the high volume material, so anywhere between 500 or say 500 and 1,000 for those paper coating type materials and ceramics type materials. But it's when you start looking at the halosite or the highly beneficated material, that's when you start getting into the thousands of dollars per tonne. But at the moment, I'd say at the 500 to 1,000, but much higher volumes.
And what sort of how's the industry developed? We've had Andromeda on before and other kaolisite and halosite players, or kaolin rather. What's the market looking like, particularly in South Australia, when you've got kind of lots of like-minded companies around where you are?
Well, it's again another good question. We go on people such as TMR and their research papers that are out there in the market. It's a very much I like to say it's a bellwether of GDPs. If economies are growing, your kaolin market's growing. And so that's why we believe, and also the research we have, is just growing in basically multiples of 10, 15 and 20% per annum, purely on the backs of GDPs worldwide. We all know about these inflation issues that are happening worldwide, so it will be very interesting to see how it happens on a global scale. But mate, papers, ceramics, paints, etc., are always going to be used as the world grows. Thus, our kaolin market increases.
And what's the production process look like? How do you get it out of the ground and get it to port, for example?
Very, very simple, which is one of the really attractive things about exploring for kaolin. Just to take a step back, the drilling's very simple. It's shallow. We've been using augering. We think that the most complicated we'll have to use is basically air core drilling. And then it's essentially a quarry style operation, because there's very little, you're targeting horizons. You're not targeting, if you like a gold vein or something like that. So you're targeting whole horizons. On site, you'll do some separation of the clay material and the silicon material, and then maybe some drying to allow transport to be much more efficient. There might be some separation of grain sizes, and then that's it. So that's why we use the term DSO, direct ship ore, because you're not doing, if you like, on-site processing. But that said, part of our process over the next 6 months is to look at metakaolin, which is basically calcining the kaolin, heating it up and creating a much more high value product. So that's our research that we're doing as a company in regarding to adding value to our product.
And just finishing up on the indicative news flow here, what can we expect moving forward?
Well, really our next news flow is our drill results and resource coming out of Bobalong. So we're finalising that really over the next 4 weeks. We're commencing aeromagnetic surveys. We've got to go in line with the farming out there in the Kojonup region. And then we want to start getting our land access and start drilling at the Holly project really within the next 2 to 3 months. In South Australia, we want to leverage off all the work that's been done in the Eyre Peninsula. I'm involved in another company on the Eyre Peninsula called Power Minerals. We want to get round there and start drilling on the Eyre Peninsula at White Knight. And by the end of the year, we want to be talking about what potential prices are and what potential volumes we'll be doing out of Kojonup out of our Bobalong project.
Stephen, thanks for your time. I know you're waiting on your COVID test. Good luck with that, and have a nice weekend.
Yeah. No worries. Thanks, Tim. Thanks, everyone.
Keep us posted.
Absolutely.
That's all we have time for, everyone. Thank you again for all your time on a Friday lunchtime.